Hello friends, welcome back to my channel. If you're stopping by for the first time, my name is Michelle D'Souza. I'm a licensed financial advisor in Ontario. Today I'm going to diverge a bit from my last few episodes on life insurance. If you have been following me on the channel, then you would have known that in the last 2 weeks I spoke about life insurance, talking about why you need life insurance and how you can decide how much coverage to get, and also a little bit about estate taxes and differences in life insurance between India and Canada. If you want to check out any of those videos, you can check this playlist over here. So in this video, I'm going to diverge a bit, as I mentioned before, and talk about the rental income for non-residents in Canada. This was one of the topics requested on my channel. The first thing that you need to know for rental income or for timber royalties, basically the Canadian government, the CRA, expects 25% of your gross rental income as taxes to be paid out. Now, if as a non-resident you don't want to file a return by the April of next year, April 30th is usually the deadline. It depends. This year it was May 2nd, just because a weekend came in between. But just to give you a picture, basically, if you do not want to file your income taxes by the next year as a non-resident, if you do not want to bother about filing income taxes, then you're going to owe 25% of your gross rental income as taxes to the CRA. And this should be filled out by your tenant as an NR4 form and submitted to the CRA along with the taxes remitted on your behalf. Now, obviously, you wouldn't want to put all of these troubles on your tenant. So you would have an agent or a property manager as an intermediary to do this for you. So in that scenario, the agent would be the one who is going to remit that 25% to the CRA and only give you 75% of that gross rental income. Now, the second thing that you need to consider is if you do not want this scenario, if you do not want to pay 25% of your gross rental income as taxes, then what you can do is before the January 1st of the year that you want to put those rental properties on lease, you would have to fill a form called the NR6 form, through which the CRA can get to know that you have some rental properties that you plan to put on rent, and they would expect 25% of the net rental income. Now, what I mean by net rental income is this is equal to your gross rental income minus the expenses that you would have on your property. And those expenses will include your property taxes, your utility bills, if you are paying the utility bills and not asking your tenant to pay it, and also some kind of capital expenses, some repairs on the house. If you have to replace a furnace, if you have to replace the heater, some kind of appliances in the house, all of that comes under the expenses. So you can put all of this in your NR6 form, and in that way, you could save some of your taxes. Now, if you have not done any of this and basically not remitted the taxes on time, the CRA can actually add up interest on the tax that you owe, and by the end of the year you may be owing a lot more taxes or a lot more amount in terms of taxes plus penalty plus interest. So be careful of this if you have rental properties in Canada. Make sure you hire a proper agent, hire a proper advisor, a person within the country to take care of these matters for you. The third thing that you need to know is you can file your taxes the next year on the income that you have gained out of rents in this year. It's usually by next year, April or June actually, because this is just the rental income. You have time till June to file your income taxes. This generally comes under the section 216 of the Income Tax Act. So once you file your taxes under this particular section, you could be getting some returns if excess tax has been deducted, or you may have to pay excess taxes to the CRA. Generally, when 25% is deducted, it is always in excess. So at the end of the day, you will definitely get a return. So make sure you file an income tax return and not just leave it thinking that you've already filed NR6. So you need to file NR6, the non-resident 6 form, and you need to make sure you file your returns if you're receiving rental income as a non-resident. These were the 3 things that you should be aware of when you're receiving rental income as a non-resident. Always make sure that you consult a chartered accountant or a CPA or a CFP or an advisor, a licensed advisor, before you take any steps of putting your property on rent as a non-resident. I would love to discuss further on any of these topics that I speak about in the channel. So do visit my website, and you will find my contact details over there, my email, my phone number, and I would be more than happy to have a one-on-one conversation with you if time permits. Do click that link and you could set up an appointment from there. And thank you so much for watching. And if you found this content useful, don't forget to click that like button over there and share it among your friends. If you're leaving this country, this is an information that you should know. So I hope you enjoyed this video. Thank you so much.